Hello guys, welcome back to Gambit Trading, and in today's video I will be teaching you the basics of ICT, and from this video onwards I will be teaching you from basics to advanced of the ICT concepts in simple terms so that it will be easy for you to understand and learn. Before starting to teach you all about the basics to advanced ICT, I want to tell you that I'll be available on Telegram 24/7 with your questions. You can come join my Telegram and you can ask me any question and I'll be available to answer it to you whenever I'm free. So yeah, you can come to me with any of your questions and I'll be happy to help you. And you can also check out my free signals in the Telegram channel that I provide like 1 or 2 every week, the trades that I take. So yeah, let's start with the video. I will not complicate it, rather I will explain you in simple terms and cut out all the BS, mention what you have to focus on. And so let's start from structure mapping, which is the basics of ICT. What structure mapping is, it means to figure out the trend in the market. Either the trend is uptrend or downtrend. Market has 3 moves. One is impulsive move, which means market goes up in a very strong and quick move. And then the next one is correction, which means after market taps some supply zone or say some liquidity grab or something like that, so market gives a correction after that, and then the trend continues something like this. So to figure out the trend in the market, we use break of structure and change of character. Break of structure simply means that the break of a structure, you can see over here, this zone over here is a downtrend in a smaller time frame. Suppose that this whole structure is a 4-hourly or say daily time frame, then this will be your internal structure, and over here inside this structure we will have several bullish and then bearish structures. Market moves something like this, and then when the high is taken, the structure, this current structure, will be broken to the upside, and then market will continue its move to the upside. If it's still hard for you to understand, then you can understand it with a simple explanation, which is when the market breaks previous high with a new continuation move, and the point where it surpasses the previous high, we mark that break of structure. But which is a valid break of structure? Which is a valid structure mapping? Where do we mark the valid structures? You have to learn that, because it's not as simple as it seems like, because we have several things we need to consider before confirming a valid break of structure and change of character. For example, we have inducement, which I will be explaining you later on this video, and this is the first part. I don't want to complicate it so much, and I will make it short and sweet for you to understand. And in this video we will be looking at inducement, valid break of structure and change of character, where inducement is change of character and where change of character is inducement. By the way, both are same, but we have to figure out where it is formed so that we can trade accordingly. And next we will learn about is how do we enter trades on inducement levels and on structures, and which structure is your liquidity hunt, trap, etc, etc. So pullback also comes inside structure mapping, but I will make a separate video about that. After this it will be a part 2, but on this video it's just basics. So similarly, on a downtrend we have break of structures on the downside, on bullish trend we have on the upside, on bearish trend we have on the downside. So when a new lower low is formed by market, something like this, when a new lower low is formed and then market goes up to give a retest or a pullback like this, makes a low over here, goes up to give a pullback, and then drops from maybe, so suppose supply zone or order block, and then breaks this low, it's called break of structure. And then market again gives a correction and then continues the trend to the downside. When it gives a new lower low, then we confirm the break of structure. But how do we confirm it? We confirm the break of structure with valid inducement. Let me explain you the next part. So market is fractal in nature, which means if a certain pattern is formed in a 4-hourly time frame or say daily or any higher time frame, like this, suppose that this whole structure is of 4-hourly time frame. So for example, over here, if this V is made, or say suppose W is made on this particular zone in 4-hourly time frame, then similarly on 1-minute time frame this same W pattern will be made, which means market is fractal in nature and the patterns are repetitive. It forms again and again on many time frames, not only one time frame, and it continues its behavior. However the structures are formed, it does not matter. What matters is your levels that you have marked for identifying the trend, and valid structures, demand zones and supply zones where you are going to take a trade. So if you keep on looking at charts, you will notice that market moves in such a way that it takes liquidity of both the sides, which means if market gives you a new higher high and then gives you a pullback, market tends to not keep this particular move, which will be a single candlestick on a higher time frame. Market tends to sweep both the high and low of this candle with another candle or just a wick of the candle. With this particular both the moves, you can see this high was taken with a new move, which was a fake out, and this move was also taken with this correction. So over here, when market gives a pullback on a trend and then takes that low after taking the high, after taking this high, if the market is falling down, we consider this as a valid pullback, as well as this is our inducement. We mark this as our inducement. Why, you may ask? I just said when the market moves up in a impulsive move and then gives a correction, it goes up, takes the liquidity of previous high, and then tends to move down to take the low. And after that, when market takes the inducement, which is this low, it tends to move up and continue the trend. So why did the market go up from here? Maybe, for example, this particular move over here had an order block which pushed the price up from here. If you look carefully on the charts, you will see this structure is repeating again and again. For example, you can see over here this particular move. Let me mark it. This particular move, when the market gave a new lower low, it gave a pullback. So over here, orders were getting filled. You can see that the overall trend is bearish on this particular time frame. Just a pro tip: you have to mark the structures first. You have to identify the trend of the market, and if the market is bullish, then you have to look for potential buys, and if it's bearish, you have to look for potential sells. You cannot go against the market until and unless it has tapped on any particular order block or demand zone or supply zone. You will be more profitable and your win rate will be higher when you focus on the trend of the market and not go against it. You can see after the pullback, the market swept the high with this move. And then market also swept this low with this move. So over here, your inducement will be this, because you see, after giving a pullback, the low was not protected. The low was taken by the market. This will be a liquidity, as I have already explained you in the drawing, and this will be your inducement, sweeping the high that has been set after a new lower low, or sweeping the low after setting a new higher high. Only the catch is it has to sweep both the high or the low. This is your inducement. And after that, market came and maybe over here was 1 minute order block. It tapped and then it is continued the trend. But I will tell you where you have to take the trades after the inducement. I will explain you later on this video itself. Let's focus on what inducement is at this moment. So if I mark this with a drawing, then you can see the trend is bearish. Market swept the low, and after that market swept the high, and this high that was swept was your inducement, and then the trend continued. Similarly, if it was a bullish trend, market would come up, give you a pullback, sweep the previous high, then come down to take this low, and then continue the trend. In some cases, if your order block or any other particular demand zone is over here, then you don't rush to take your trades immediately after the inducement has been taken. You have to look at several factors, which I will explain you later. But market sometimes moves like this, and then goes like this. Why this happens is market is making internal structures to hunt liquidity, because the market works on liquidity. If this kind of small patterns or pullbacks are not formed, then the big money and the big players, their orders won't get filled and the market will not have any movements. Coming back to the drawing, over here, after market took your inducement, your new lower low higher low was confirmed, because market is in a bullish trend, so it will move up by making new higher lows. So your higher low will be confirmed after the market takes the inducement and then moves up, gives you a break of structure over here, and this break of structure is now valid because the market took the inducement. This break of structure will be considered valid, and this will be your new lower low. Okay, I think I'm explaining you easily and not complicating the stuffs. So I'll give. So coming on to this structure, you can see after giving the break of structure, market made a new high. This will be your new higher high. By the way, where the point where the break of structure happened was your higher high, and this is your new higher high, because this is the highest point until this structure happened. After this structure happened, this will be this particular thing will be your new highest point. Before this thing was made, this structure was made, this will be your high, and if this is broken, then your higher high will be made, right? It's easy like that. So this was your higher high, this is your new higher high, and after the market swept this and also took the low of the pullback, which is your inducement. This is your inducement. After the pullback is swept to the downside and the high is also not protected at that very move, I'm telling you that again for you to understand it better. Market sets you a new lower low. Suppose market did not go up from here, it went up from here. At this very point, your new lower low would be this. Higher low would be this. And then your break of structure would happen over here. This would be your break of structure. I can see with the ICT traders, they mark their break of structure on every high broken, but that's not the case. Over here, if inducement is not taken, suppose inducement was not taken over here and inducement was taken over here, this would be your inducement. Inducement is not taking any lows, it's taking the previous low, the recent low. If this low was taken, then this would be your inducement over here, but this low was not taken, but market went up and made a new high over here, and then this low was swept with this move. So your recent low was swept with this move, and this would be your IDM, because this previous low was swept with by the market, and this will be your inducement, and this will not be your break of structure. This will be your same structure, same continuation move. Your new break of structure will be from here over here, because the market took out the inducement. This will be your new higher low, and this will be a break of structure. We do not consider anything between over here, because this will all be a similar move, a single move. And after that, if market goes up like this, comes down, takes this low, and then continues to fall, then move up, then come down, then move up, something like this, then over here on this case, your break of structure will be over here. Why, you may ask? Let me mark this. Because this low that market swept after making break of structure was swept by a move that came after sweeping the high. So this will be your new inducement, and this will be confirmed as your new higher high, and this will be confirmed as your new higher low. And if there is any particular order block over here, then the market will tap that or move from here itself. It depends on the situation. And your break of structure happened over here, your inducement happened over here. Over here your inducement happened, and over here your break of structure happened. So market gave you a new higher low and move up from there. It's all the same. Now let's understand change of character. Change of character means market shifting its trend from bullish to bearish. Inducement and change of character is either same, but it depends where the structure has been formed. Suppose see over here on this particular example, market is moving up from here. The trend is bullish, but then suddenly this was your suppose a supply zone. and the market tapped over here and it failed to continue upside or give a move upside, and either it swept its supply zone or just fell from tapping the supply zone, and you would mark this as your inducement. In normal case, you would mark this as your inducement and expect the market to continue moving upside from over here. But it's not the case when market hits any supply zone or demand zone. When market gives this kind of move and breaks the previous higher low and makes a new lower low, then at this very case, your inducement turns into change of character. After change of character, then market continues making new breakup structures to the downside by setting new lower highs and lower lows until market taps any demand zone. And when the market taps any demand zone, then what happens is the trend has to be shifted. Market was bearish and now it converts to bullish. And how do we enter trades over here? To enter the trades, we will wait for the market to come to our demand zone and then give us a change of character like this over here, and then continue the move to the upside by giving breakup structures to the upside on the upside and making new higher highs and higher lows. Over here, this would have been your inducement if the trend continued from here to the downside, something like this. But that was not the case, and market tapped the demand zone and started moving upside. So we have to see at the lower time frame to confirm these kind of entries. When suppose say we are on 1 hourly and there is an order block or any support or a demand zone and the price is falling on this zone, so the price will move a little bit to give you a 2 or 1 or 2 or 3 candles on this zone and then start moving upside. So on this very particular zone, what would happen in 5 minutes or 1 minute time frame is, on 1 minute time frame, you can expect this to form this kind of moves to form on 1 minute time frame. So this particular structure would be something like this on 1 minute time frame. And what would happen over here is the price was coming down, it tapped to the demand zone over here and then started moving upside. So over here, if it was bearish trend and the price did not tap to any demand zone, we would mark this as our inducement. But at this very particular case, this is our change of character because market is now on the demand zone. So we mark this as our change of character. And then the move that swept the previous low, this point is very important because this has the most liquidity and this was the point where market turned its direction from. So we can expect the price to come down to tap to any order block or any structure that has been made over here and then continue giving its move to the upside. And on that particular journey that this smaller time frame structure makes, it makes various traps. It sweeps lows, it makes traps, and it makes traps, it sweeps lows, and then it moves to the direction that the higher time frame pulls it to. So this will be your now the breakup structure, and then this will be your new inducement. Why? Change of character has already happened and the price will now move to the upside. So when this inducement is taken, this will not be a breakup structure. If you got that, I mean, if you were listening to me very carefully and not giving attention, so that's what happens. So the market gives inducement and gives the breakup structure over here. This will be your new breakup structure, and then the price will continue to move upside. Till now we have learned that this is our breakup structure, this is our breakup structure, this is our breakup structure, but that's not the case. To confirm a breakup structure or change of character, inducement must be swept, but change of character and inducement are same, but it depends where it's formed. So breakup structure is only confirmed after inducement is taken. Let me give you one last example. Over here, a breakup structure is over here, not over here, and this is your inducement. because the market was in a bullish trend. It made a new higher high. It gave a pullback. It swept its higher high and then swept its pullback, which is your new higher low. So this particular zone will be your inducement and the price will continue to move up. So let me explain you this. So now let me explain you a few entries that you can make after inducement has been taken, and after that I'll show you how to identify the trend on a chart. There are a few entry modules that you need to follow in order to take good entries and confirm your trades by using inducement in your charts and confirming the trend. So how can you make any entries after inducement has been taken? Suppose say this is your bearish trend and the price is moving to the downside. Okay, so on this very case, the order block that is above the inducement has very high probability of working and giving good rejections. But you have to see, after the inducement there is order block and the price gives you a good reaction on that order block. Either it sweeps the order block with a wick and the candle's body closes below the order block. So what you have to notice is the body of the candle must be closed below the order block after sweeping the order block, and then you can expect the price to fall. So over here on this case, you can expect this kind of moves on this particular zone and make your entry like this. After the market sweeps your high, gives a change of character, takes the inducement, taps to the order block and then falls. So when the change of character already happens, market is giving you a pullback, right? Pullback to the upside. So the pullback needs to sweep its low and high to be confirmed as your inducement. So this will be your order block. This particular wick will have candles on a lower time frame, right? So this can have order blocks or bearish engulfing. So market, when it comes to this price, or suppose say the next hourly candle that was opened, so the price moves something like this. Price goes up and then falls over here, right? So on this very move, price will tap the zone, this kind of order block, and then fall from there. So what you need to remember is the order block that's above the inducement will have high probability of working. Either it works after tapping to the order block or it sweeps the order block. So the next entry is immediately after the inducement has been taken. If we have any order block over here, it's not necessary for it to tap to the order block. What's necessary is it takes the inducement. Either the candle closes below the inducement or above the inducement. If the candle closes above this inducement line, then we can expect the price to move up to the order block. But if that's not the case and it closes with a wick above the inducement, then we can make an entry on this particular move when we have a change of character like this, or it takes the inducement with same entry module like this, and we can take our entry over here immediately after the inducement has been taken. So over here on this example, on this drawing, I have explained you that the inducement, we can take trades immediately after inducement is taken, or we can take trades on the order block, and any order block that has been made on this particular move is not valid. Only the extreme order block is valid, and the order block that's over here, that's just above the inducement, that is valid, and anything in between is just your liquidity. So either the move comes down from here or goes to your POI and moves down, but you have to look at every point that it gives you any kind of rejections. So that all will be your traps, and it will be your entries on the inducements. So this will be your inducement, this will be your inducement, and this will be your inducement. But I told you this will be a change of character when the market is moving up. But you also have to know that this particular move is something like this in a higher time frame, right? So this is the internal structures that's been being formed. So you have to look at several time frames to confirm that. If you can't understand, you can watch the video once or twice or thrice until you get it in your head. These are the internal structures, but this will be your move in the lower time frame, and we can mark this as a change of character, and we can also mark this as your change of character over here. But what you have to keep in mind is this is all in a lower time frame, and the market will go down and continue its trend to the downside until and unless it taps to any demand zone. So let's look at some examples on the chart. Price is in a bearish trend over here, but then it makes a low, and then it gives us a pullback, and then the pullback is swept with a new move after it sweeps the low. So on this case, this will be your inducement until if the market has tapped any demand zone over here, and if the market has to change its character and continue its move to the upside, your new inducement has not been formed in any case over here. So you would mark your valid break of structure after the inducement has been taken. So that's the advanced ICT that I just taught you. You can go and backtest that, and I'll see you in the next video.